As a lot of you guys know, my name is Christy Lee. I am with Law Offices of Christy Lee. I'm a tax attorney. I have a tax boutique. I have 3 offices. They are in Texas, Hawaii, and Alaska, even though I represent businesses throughout the entire world. And we protect businesses from the IRS and apparently the SBA. And that's why we're here to talk about this PPP. And I am very honored to have Monica Reid, who's a CPA, and Marc Enzi, and they're gonna introduce themselves in a minute, but first let's kind of go through the normal thing I always do. This is not legal advice. A lot of you, I know some of you are my clients. You may also work with Monica or Marc, or people just interested in knowing more about the PPP program. And as you're gonna find out in this panel discussion, this gets really, really confusing. And it is not about who's right or who's wrong. It is what is the right answer. And I have been dealing, Monica and Marc and myself, we have been having emails going back and forth, phone calls, discussions on how should we analyze certain sections, because one day it's 1 + 1 = 2. The next day, the SBA comes out and goes, in the alternative, 1 + 1 can be 9.74.29 squared. And then 3 days later, they come back with 1 + 1 = 2, and it's the color purple. I mean, so it's very, very confusing. There's a lot of things that Monica, Marc, and I absolutely agree on, and there's some that we don't. So with one other thing, yes, so we've got the chat box and the Q&A. So we've got a lot of questions we're gonna go through, but then we also wanna be able to answer any questions that you have. So I, without further ado, would love to introduce Marc Enzi, if you could introduce yourself to everybody.
Hello everyone, my name is Marc Enzi. My company, Tax Solutions, trusted globally. We're a full-service tax firm. We handle tax preparation. We've got a lot of clients around the world. We also do a lot of small business work. So today we're talking about the Paycheck Protection Program. During the year when we're not handling PPP things, we do a lot of tax controversy work. So tax controversy, fancy phrase for when there's a disagreement between you and the IRS on what you owe or what they can beat out of you. That's where we get involved to save you money and keep them off your back. Marc Enzi, Tax Solutions. And next we have Miss Monica Reid.
Hi, I'm Monica Reid. I'm a CPA at Altman Rogers & Company. My firm has 3 offices in the state of Alaska: Anchorage, Juneau, and Soldotna. I'm out of the Anchorage office, and I specialize in compliance audits over federal programs and financial reporting.
Thank you, guys. And by the way, with us 3, I think we could take over the world. I mean, with all the 3, with everything that all 3 of us do.
Yeah, we've got all 3 corners.
Yeah, we pretty much do it all tax-wise. Okay, so let's just hit the questions right away. Some of them are straightforward and some of them are not. So the first question that we've been asked is there any money left in PPP and can I still apply? So I have actually been in contact with some of the banks and they say, yes, there is still some money out there, but I will say a lot of the banks now are getting more and more strict on who they are accepting. And they're also saying things like, yeah, if you're not a member, we're not going to deal with it anymore. What is your experience with that, Monica?
Well, I know, a lot of the banks aren't accepting in Anchorage, but I know that Northrim is currently accepting customers as long as they open up a checking account with them.
And Marc, what do you got?
Every bank that I've checked with lately has, they've closed it up, but I know that there's still some out there. I think Heritage Bank is still doing it, so you have to check with them. All my clients have already got what they wanted. I haven't had anyone new call me wanting to get a PPP loan. So I know money's still available. I just know not all the banks are still doing them.
Right, yeah, okay. So the next question, if my 2019 tax return is not filed yet, can I still apply for the PPP loan? Monica, since you're the CPA, what do you think?
So yes, and the guidance says that, yes, you can file or, apply for PPP even if your tax return is not completed. But I would advise that your tax return be 99.9% complete, because they will, in my opinion, they'll probably be double checking your tax return again, your completed tax return against what you applied for in the PPP. And they actually use, for your sole proprietors who file a 1040, they're going to be looking at your Schedule C, so that needs to be completely filled out and completed. And then for partnerships, they're going to be looking at your K1s and probably the whole 1065. But for a lot of my partnerships, they applied during the first round, and then in the second round, there was a new ruling that came out that partners could get their their income reported and then get their own loan. So
yeah, I'd have to agree with that. Basically, don't be a liar. I mean, I've had people say to me, I'm going to jack up what I believe my 2019 is and not have all these allowable deductions so that my PPP loan can be higher. I'm like, okay. And then you're going to file another return, and you know you're signing these things under penalty of perjury. You're committing fraud. I mean,
Yep.
wouldn't you think? Well, what do you think, Mark?
Yeah, and you know, nothing like proving it up with signing documents, making a paper trail, proving up the fraud. So it's a bad idea. Just play it straight. If you need the money, good, take the money. But this is not it's not like winning the lottery. And there've already been some news stories on people who've claimed to have 100+ employees with a trucking company, and he's already in federal custody. So don't do it.
Right, right. And if you do, then make sure you have a lot of money for a retainer to retain me for your criminal tax, for your criminal charges that you have been filed against you. Okay, so next question. In the forgiveness application, it states that the covered period payroll cost is what is paid and incurred during the covered period. Okay, this one makes me want to drink more of this. So I am not a CPA, an accountant, and I know Mark and Monica like really understand this. I mean, what's the difference between paid and incurred? Monica, what do you got?
okay, well, this one can be very confusing for a lot of my clients or other people's clients who are on cash basis. So I might tell you what it is right now, but you might be confused, and that's okay. Just reach out to us after the webinar. But basically, you know, when you run payroll, for example, it's going to say pay period, and that pay period needs to be the starting point of what you can cover with PPP. Needs to start on the day of disbursement at earliest. So basically, for all of my clients who have single audits, you guys know who you are, have had compliance, you understand this because this is something that we test when we come out and do your audits. But for people who don't understand, I would you honestly are going to need our help for this one, because if you're a cash basis client, this is definitely going to confuse you. And there is new ruling, which will probably, I think it's a later question, but there is a new ruling to help our cash basis clients, and we can actually push back the start date.
Right, but that's just going to depend on each individual person.
Yes.
Whoever made these rules, really, I really would like to have a talk with them. Mark, what do you think? Do you have anything to add to that?
I do. So, and I've had a couple of questions pop up. People are asking, they're not exactly sure what the PPP loan is. So big picture, the Paycheck Protection Program loan, what that is people were loaned 2.5 months of their operating expenses to cover 2 months of payroll, plus some other allowable expenses, rent, utilities, mortgage, things like that. So that's sort of the big overview, 30,000-foot view. So our goal here is you've got 8 weeks, 56 days to spend that 2.5 months of money correctly by the rules in order to get the loan to be forgivable. In other words, don't have to pay it back. If you don't play by the rules, you're going to have to pay it back. And you're only going to have 2 years to do it. So the question is there's a lot of confusion over what's the spend period or the payback period. So the covered period is when you get the loan. So if you got PPP proceeds, you want to keep that in a segregated account, separate bank account, and then you've got 56 days or 8 weeks to spend that money, and you've got to spend it according to some rules. You can't just go nuts and go on vacation or buy a whole bunch of new stuff. It's got to be spent on 75% on payroll, and then there's some other rules that you have to pay, that you have to abide by. So one of the questions that Christy was asking was paid or incurred. Well, it's paid and incurred. Okay, so the point is that you can't save up your payroll and then not pay your employees for a month or two, and then, okay, we got the PPP loan, great, now we're going to run payroll. So all that money, right, all that payroll expense that was incurred prior to the covered period starting when you got the loan, or your next pay period that starts after that, any money that wasn't incurred during the covered period you can't count that, even if you paid it during the period. So it's going to be paid and incurred. So next, the money that's incurred from the pay starting period, right, or your next starting payroll date, you can adjust it if you need to conform with your payroll. All the payroll that you incurred during that period, that's allowable for the calculations. Now, you don't have to run a payroll on day 56. They're going to allow you to catch that up on your next regular payroll cycle. So it's paid and incurred. It's not paid or incurred.
So, Mark, I just want to make sure, and I'm not saying that you're not explaining it, but this is just really difficult. So I've got clients, I'm just going to really dummy it down.
Okay.
I've got clients that have said, this is what the advice I've been given. So if they come to me and they're like, hey, I got my money, let's just make it May 1, because May 1's a nice day, right? I got my money May 1.
Yep.
But I owe for March and April payroll, I didn't pay it. And I told them, you're not paying it with this PPP money. That needs to be paid during with other money.
Yep.
And okay, so I just want to make sure that we're all on the same page. Monica, you agree?
Yes.
Yes.
Okay, just making sure that we got that. Because because it's paid and incurred, and you're like, well, I don't know. I mean, I understand paid, because paid's easy, right? When I write my little check, that's when it's paid. But when did I incur that? So, I saw a new reg that came out that I was trying to figure out how could I use it towards rent, but I can't. But it was even saying things like, if you get your utilities, and not just payroll, but you get your utilities, and you get say you get your payment in May 1, like you get your loan money May 1, and then May 3rd, your utilities are due. And they're like, okay, you can pay that. And then you can pay also June and possibly July. So I was like, oh my gosh, this is so confusing to me. And if it's not that much money, my recommendation to my clients, it's like, if it's $150, just don't do it. I mean, just make the banker's life as easy as possible.
Yes.
Do you guys, are you thinking the same thing?
Yes, definitely. Like if you get a utility bill, like you get your bill on May 1st or whatever, that's probably a bill for the previous month, April. So you don't want to use PPP to cover that. You want to wait until you get your bill and, the next month, and then that will be for May, and you can pay that. And so I would say the same thing with the following month in June.
Okay, so say you've got, I'm not trying to beat the dead horse. I just want to make sure that, say you've got a cell phone bill or let's say rent, right? Because rent, you're always paying that stuff forward. So right. May 1, rent is due. I can use, because that is due now, even though it's for all of May, I can pay May 1 with the PPP, right?
Yes.
Okay. All right. I don't mean
but there is a lot of confusion over that. So that's
okay. And this just came out and changed everything I've said before. So next question, are staff bonuses allowable? Use of PPP. I have said all along, I know Monica said, Mark has said, we've all agreed that no, don't do it. But they actually came out with regulations and they said the word bonus. Now I've told my clients, especially people, restaurants, doctors, stores, I mean, anybody that's dealing with the public, I've said you can pay hazard pay, but they actually came out and said you can pay bonuses, right?
Yep.
So
and that would pay.
Yeah, but of course, you can't go over the $100,000.
Right.
And then I also would say, don't be a pig, right? If the person makes $12 an hour, don't give them a $10,000 bonus. I mean, do you guys agree with that still?
Yeah, and I would split it evenly between the employees, honestly, and try to be, fair in that sense.
Ooh, I like that. I didn't even think that's a great idea. Mark, what do you think?
Well, you definitely want to make sure that you don't go over I believe it's the 15,385 number over the 8 weeks. And you can divide that by 8 and you come up with, I don't know, around $1,900 and $1,900 some odd dollars. You definitely don't want to go over that. If you're discriminating against other employees, say in favor of a shareholder in the company, that probably won't be allowed, because we're seeing where there may be a look back on that. So you'll have to check with your advisor and make sure you're aware of the rules.
Okay. And then the next two questions are somewhat similar. So I'm going to ask them together to get your opinions on them. So the first question would be, do you think the PPP loans will be extended past the 2 months? And the other one is, if the 8-week period to use PPP funds is extended to, let's say, a 16-week period, would it be safe to assume the owner's payroll that is only allowed for the 8 week, and I know we're going to talk about that a little bit later, for the 8 weeks, do you think that could be extended to the 16-week equivalent of compensation? So the first part is that 8 weeks, right? Because they've been really hardcore about 8 weeks, 8 weeks, 8 weeks, 8 weeks. It'll only be 56 days. But Monica, haven't they come out with like some new regs that you can extend it just a little bit?
Yeah, it's based on your payroll periods though. I mean, I just looked at the new SOP that was issued on Friday, and it said that it had to be, the earliest date is the disbursement date. And then it said, or the first payroll run that you have that's, 100% in the period. So, and anyone who has questions about this, I have the actual SOP and I can send that to you.
And Mark, didn't they also say something like at the end, like, so say you do your 8 week period and, when you're making payroll, if you hit it on that last day, if you're doing every 2 weeks like myself and a lot of my clients are doing, that last day is day 56. Aren't
Right.
they giving an extension to like when that can go through your, so you don't have to like hurry up and kill yourself to get your payroll out?
Yes, the payment can happen on your next regular payroll cycle, as long as it's incurred during that 56-day period.
Yep.
And so, you don't necessarily have to start your 56-day clock on the day that you get the money. You can start on your next regular pay cycle. So I've got an employee, or I've got a client who, they got their PPP money on May the 8th. Well, their next regular payroll cycle started on May the 11th. So they got the money on a Friday. Monday starts their new payroll cycle. And so, and they didn't have the money to pay payroll. And so they were waiting, and the employees were hanging on. Okay, they were white knuckled and money came in. Oh, good. So they'd been saving up payroll for about 11 days. And then they were able to write the April 30th checks on May the 11th. So, they came to like, woohoo, we're already ahead of the game, man. We already spent a bunch of that PPP money. Like, no, you didn't. You didn't spend any of it. No, you didn't.
You're telling me this story and I'm thinking, my eyeballs are getting bigger and I'm like, oh, my tummy's hurting. Uh-oh.
So everything that they spent, right, that was not related to payroll, that they're actually paying somebody for work done during that 56-week period, doesn't count. So they got the money May 8th, the regular pay cycle started May the 11th, that's when they want to do this for. Okay, fine. Everything from May the 11th through, I think it's July the 5th, is going to be within the incurred definition. So any pay for an employee who works between May the 11th and July the 5th, that is going to be covered under the PPP program. Now, if their next regular pay date is not until, say, July the 15th, hey, that's fine. They can run payroll. They can pay them for everything up through July the 5th, and then that's good. So they're fine. So it's paid and incurred.
Yeah, okay.
And then I think, oh, sorry.
No, go ahead, Monica.
I think this is going to be something that I think each of our clients will need to come to us with, because I know there's a lot of tricky things that will hang people up.
And I just want to say, because I know Monica and I know Mark, and a lot of you do know me. This is not about us being greedy, like, oh, you need to come to us because you can't do it yourself. No, seriously, this is really awful. This is very, very confusing. And it's so fun because, like, again, they keep changing the rules. And it's like, it's getting very frustrating for everybody. And we all want everybody's loan to get forgiven. And just to answer that one, the second part of that question, do we believe that they're going to extend the 8-week period to like possibly a 16-week period? I don't think that's going to happen. It's too far in the game. I mean, I'm in mine 6+ weeks. So I can't see them extending it. If they did extend it to say, hey, it's 8 weeks and now we're going to extend it to 16 weeks where you can use more money for your payroll, that would be really great. Would the employer's payroll allowed, if they were like a sole prop or, an employee or whatever it is, I don't know. I'd probably say yes, but who knows? I mean, that's just trying to guess, what's going to happen. And it gets very frustrating, as a litigator, when I do tax litigation, you're always trying to figure out what's the other side going to say, because I got to prepare arguments. Oh, at this point, it's like, I'm not preparing it. I'm just going with what is the current, rules and regulations right now. All right, next question. Contractors aren't allowed for forgivable PPP loans, but our bookkeeper is on a contract rather than an employee. Can we use PPP to cover that content? Monica?
For this one, I said no, because they're a contractor and they actually can get their own PPP loan and have it forgiven.
Yeah, and I'll say that this is what the big confusion is. The actual law came out and they said you could use contractors. They said it. And then the regs came out and said, we changed our mind. Yep. And normally, and I always tell people this, law is here. Regs are here. Law always trumps regs. But unfortunately, in the law, it stated, hey, by the way, those regs can trump us. Like if regs come out that trump us, then the law's trumped. I've never seen that before. What are your thoughts on this, Mark?
I use the word supersede.
Oh, yeah, okay, yeah.
I've run into this before. Yes, you are correct, Christy. They came out in the law, clearly it said that contractors are allowable, and then SBA and Secretary of Treasury came out and said, nope, they can go get their own. So you're fighting an uphill battle, and unless you've got the money to go file a federal lawsuit, just follow the rules. Right. And that's another issue. It's the banks who are going to be administering the forgiveness on this. And the banks have been told now that they're on the hook for the money if they don't audit this correctly. So the banks aren't auditors, banks aren't the IRS. And the banks now have got a ton of risk and exposure. And I love how they're changing the rules. This is probably why banks are not wanting to lend so much money anymore. Anyway, point is that when you go through this and you do this PPP loan forgiveness application, don't make it difficult for the banker. Make sure that everything that you've claimed and everything that you put on that application is supportable and solid, and you've got a paper trail, and you're going to make it easy for them. If they got to dig and they got to go chase you, they're not going to. They're just going to pull out the no stamp and disallow it because nobody's going to argue with them. It's the yes stamp.
I love what you said. Do you remember what you told me yesterday, Mark?
Oh, yeah.
I don't want to steal your joke.
Everybody's got a no stamp on their desk, and you don't have to justify to anybody why you used it. They got a big one. It's right there. There's no. It's like the IRS. The yes stamp, it's in the back. It's locked up in a safe behind two supervisors' desks, and you got to get permission. You're not getting the yes stamp unless you make it easy and you lead them to it. So don't come in with a halfway application. Make sure everything is supported, 3 ways till Sunday, and know what the rules are, because you're probably only going to get one pass on this. And if they hit you with the no stamp, now you got to go fight an appeal. And again, the bank's not willing to give it up. And if somebody already said no once, the next guy doesn't want to overrule them. And so make your life easy. Do it right the first time, or hire somebody who knows how to do it.
I will say legally, right, and I don't represent banks, but there is no way that they originally said, lenders, you are indemnified, which means as long as you don't do something gross and completely just reckless, you're indemnified and you're not going to get in trouble. And now they've changed it. It's like, I don't think legally they can do that as a bank. I mean, we'll talk about that in a bit, but it still comes to, again, like I've always said, and I always do like the little rocking, you get your little banker in your arm like a baby, and you're going to spoon feed it, smash bananas and just be like, I want this loan to be forgiven. So here's everything I need. And now the bankers are going to get nervous, right? Because they're going to think, great, I could possibly, it could come back on them. So we'll talk about that in a minute, because I want to move on to the question is, how will the forgiveness application work? And I think I want to ask the question the way that it was asked, just so that everybody knows that was your question. But I think the question really should be like, what is the most important thing with that forgiveness application? And to me is to fill the thing out and to make sure your FTEs are right, because that's where you can really get a kick in the face. What do you think, Monica?
The FTEs, sorry, can you repeat that one more time?
Yeah, so I mean, like, what do you think is the most important thing with the forgiveness application?
The forgiveness application is going to be the number of employees that you had during the allowable period. So there's going to be 2 different options that you can choose. I believe the first one, you guys correct me if I'm wrong, but I know it was January through June of 2019. And then the other option was from in 2020, January 1st, 2020 to February 29, 2020. And you'll need to keep a very detailed count of how many employees you had during those periods, and then compare it to your PPP covered period of how many employees you had, because that's going to hit people, I think, the hardest if you have not retained the number of employees that you had. And so that's something I know that is going to be very time consuming, especially for our clients that have a lot of employees, a lot of different locations. You know, I have some corporations that have lots of different subsidiaries, and I think, and the other thing that we need to be careful about is, you know, I know there's a lot of turnover in some companies where you'll have, you know, maybe one position, but it might get refilled 3 different times, and there might be some overlap, and that's something that we really need to look at. I think Mark.
Oh,
do you got,
no,
Mark?
go ahead, finish. I just, whenever you're done, I got something to add to that.
Okay, yeah, go ahead, Mark. That was what I was going to say.
So I've had this question come up, and the full-time employee or the full-time equivalent employee, so FTE, you may hear that term kicked around. Those are your an FTE for HR purposes could be 30 or 32 hours. Well, for PPP purposes, again, the goal being, yeah, they gave you all this money, now they're going to want some of it back. So they've made it pretty restrictive. It's a 40-hour employee as an FTE. I'm not saying it is for HR purposes or for insurance purposes, but for PPP loan purposes, 40 hours is a full-time employee. If they work 30 hours, you have 0.75 of an FTE. So if you have 2.75 employees, that would be 1.5 FTEs there. So the point is you could have somebody working 30 hours a week and another person working 10 hours a week. Those two combined would equal a 40-hour FTE. So make your life easy. Get ahead of the game. You need to start doing this. You should do it today. Get one of your employees or do it yourself. You make yourself a matrix and start with January 1 and go vertically all the way down to June 30th. And then across the top, list out your employees. And then every day that they were on the clock, you put them down. If it's a full-time salaried employee, just Monday through Friday, put them down 8 hours a day, Monday through Friday, and build yourself that grid and that matrix, because you're going to need it. Guaranteed, you will need it. You will not be able to do this forgiveness application without it. So unless you can document it, and you're going to need payroll records to do this. So you're going to be talking to your payroll provider, you're going to be in your QuickBooks, and you're going to be talking to your accountant a lot while you put this together. But right now, you can start with your timesheets. You need to do it from January 1st through June 30th, because those are the testing periods that you're going to need. Plus, if you go spilling over into July.
Mark, I think also keep in mind, you can do, I don't know if you read this part, because it's really helped out some of my clients. You can do an alternate. Instead of doing like your percentage, you can just say half. So if you've got one person working 10 hours and one person working 10 hours, you can say that's 1 FTE. You got another person working 10 hours, another person working 10 hours. They said that one person, if you don't want to do all of that, like do the 0.75, don't want to deal with, you can just say they're a half. So the FTEs is really complicated, and I do want to move on because we still have a ton of questions and we're already like 30 minutes in. So I have a question from a restaurant owner that says, what is included as far as payroll? Wages including tips or gratuities. I would say it only includes what's going to be on their actual W-2, meaning, like, I know that most restaurants, if they get cash tips, like a lot of times they don't claim the cash tips, but whatever's at the end of the day, like whatever you're going to have on their W-2, that is the gross. So say, they're getting their, I don't know what they get paid now. When I was a waitress, it was like $2.32. That was a long time ago. But whatever the waitress get, the waitress, server, whatever the politically correct name is, whatever they get paid, plus added onto their tips, that is what's going to be your payroll that you can deduct. Now here's so group health insurance. What about AFLAC? Like AFLAC that's paid. I don't think that's group health insurance. No. And it would, do you guys agree with that? It's not group health insurance, so that's not included? Do we all agree?
Yeah, it's supplemental insurance. I don't think it's health insurance.
Okay. So
I think it's disability.
Just keep in mind that when you do that payroll, all that other stuff, like the federal withholding, the Medicare, the Medicaid, and all that, that's not what's included. So whatever is on their gross, that is what you write your reimbursement for. That is what is paid out of the PPP. And I'm going to go a little bit faster with some of these just to make sure that we answer, because I know we've got a lot of questions over here. What does the 1%, how does the 1% loan work? Monica, could you address that?
So for that one, just simply whatever's not forgiven becomes a loan. As long as you know you did, there's going to be some outliers where maybe you're going to get a penalty for doing something incorrectly, but in this situation, simply what it is, anything that was not forgiven ends up becoming a loan, and the interest rate is 1%. And I highly recommend that you guys talk to your lenders about the terms of your loan, because one interesting thing I've seen, even though these are all SBA loans, all the banks that I've seen, the closing document, they're actually slightly different from each other. And so this is something you guys are going to need to talk to your banks about. What are the payment amounts going to be, etc. They should be able to provide you guys amortization schedules, payment schedules. And so yeah, I would contact your bank about this one.
And Mark, I can see over here on our questions, they're asking a lot. This was a debate that we actually have all talked about, that we disagree on it, about if the funds are added to the initial PPP loan, the 8-week clock starts then. But as we all know, that so when you get your money, but some of the partnerships were able to go back and ask for more money. And the question really is, what happens with that new money? So if I got my money on May 1, but then on June 1, I was able to get additional money, do I get 4 additional weeks? And what do you think, Mark?
I don't know. I don't know how they're going to do this. Whatever I come up with, I'm sure there's going to be a reg that goes the opposite direction, because that's just the way my life works. I don't know. That one's up in the air. Here's what I would do. Play it as straight as you can, keep your records, spend the money on schedule, and if you get new money, obviously you can't go back in time, and how could you possibly spend that money that you're getting at a future date now if you don't have the money? So I think you're going to see another change to the regs that is going to make an allowance for that. That's how I take it.
What do you think, Monica?
That was, my stance is that there's going to be 2 different clocks. And so for our partnerships and seasonal companies, because I did have a seasonal company who the regs allowed them to have a second disbursement, and then that was fine. It is interesting that it is the same loan though. I believe it is the same loan number. So it is interesting that this occurred, but I really do think it's going to be 2 different clocks, because like Mark said, how can you turn the time back? I mean,
that would seem unfair to me, right? I mean, that would seem really unfair, because I'm just telling you, for me, I think this is where we all disagree. I think, and what the banks are saying is that when they called me and said, hey, you've got clients that are partners and these are partnerships, but I'm just letting you know that we are not extending their clock. And I thought, well, okay, if they can use it, they can use it. And I know the banks are trying to be conservative, but then that would seem unjust to me, that you would have the partnerships that could possibly have a 12-week span and everybody else only gets 8. That makes me think it's only going to be whenever you get that second money, that the second money's tough shit. You're just going to have to finish it out. Whatever your loan, if you get it May 1 and you got another one June 1, then at the end of June, when your 8 weeks is up, it's up. But again, what do we know? Right. And again,
that's an interesting point. I know for my partnerships, a lot of them, or actually the 2 that I had, I don't think they took out the additional 25%. They just took out their paychecks, basically. And so that I'm like, just cut a check to yourself and count it for 8 weeks. But yeah, in the situation with, the companies that actually tacked on the 25%, I think in that sense, I guess I might reconsider my answer and say that, for utilities, it starts on the first disbursement date. Because yeah, you're right, that would be unfair. And I know the SBA is thinking about, what's fair. So
what's fair.
In this situation, I think they would start the clock earlier. But
and then that goes with the question that has been asked here. I just want to get this answered. If PPP was issued to a partnership without partners compensation, they say you can amend, and that is true. Yes, you absolutely can amend your PPP application. Big banks have no venue to do that, and you probably cannot amend elsewhere, SOL. No, you would have to go back to your original bank and if they're a big bank, you say, hey, this is allowed. Will you allow me to do it? And you can just be like the squeaky wheel. Like I've told everybody, just be the nag. Hey, it's me again. I'm going to keep calling you until you call me back. Hey, I want to amend my application. I'm allowed to. Hey, it's me again. Hello, I'm still here. I actually did tell the poor banker at Northrim, I called him about like clients that were getting their loans through. And I said, I am going to keep calling you until you call me back. So you might as well just call me back because I'm going to nag you. So just keep calling me and I'm going to send you emails. And guess what? I finally got a call back. So I know. So this is another one that is kind of a recent debate for myself. And we've all discussed this offline. And I'm not trying to rush through it, but I'm going to tell you what we've all agreed to. And then you guys can either agree or not, and then, move on to the next question. So they came out that loan forgiveness kind of gave the owners to businesses a real kick in the face, which out of nowhere it just came confusing that I don't want to say out of nowhere because sole props, it was always that way, where they just said, hey, if you're a sole proprietor, you can only get paid towards 8 weeks of what you were paid in 2019. We talked about that in the beginning. So the question is, are there caps on the amount of loan forgiveness available for owners, employees, and self-employed individuals on payroll? So you go to the reg. I mean, and it's clear to me that there's different types. So my analysis is you got sole proprietors, and that's somebody it's on your return, and you're a Schedule C. It's just the form from the IRS is called a Schedule C. Then you can be partners in a partnership. And that's a completely different form that's filed, and that's a 1065, and you get a K1. Then you have owner employees that are W-2s, where you legitimately get paid whatever you get paid, like the same time your employees do, and that is an S corporation or a C corporation. And so as sole proprietor, like I said, your money is capped at 8 weeks of your 52 weeks of 2019, or that $100,000 annual salary. So it's $1,923 a week, whichever one is less, right? That's what you get for a sole proprietor. You get nothing else concerning compensation. You don't get health insurance, and you don't get your retirement accounts. Are we in agreement, Monica, on that one?
Yes.
Mark, agreement on that?
Yes.
Okay. That one I think is pretty straightforward. Then we have that partners are capped. You guys are going to love this. Who came up with this? Partners are capped by the amount of their 2019 net earnings from self-employment reduced by their claimed Section 179. And if you're not a tax professional, you probably don't know what that is. And unreimbursed partnership expenses and depletion of 235. I mean, that is actually what it says in the regs. So we're all agreed? Yes, Monica, agree with that one?
That's straight
and
from
Mark?
CFP.
Yes, I agree.
Okay, and it even says in that reg, no health insurance contribution or retirement for sole props or partners, because such of those expenses are paid out of their net self-employment income, which means on their return, they get this little deduction for it. So that's why you're not allowed. But it also states that employee owners, right? So if you're an employee owner, you get a W-2, you're an owner of a business, you get to do 8 weeks of the 52 weeks of last year, or the 1923, which is the $100,000 cap, whichever is less. And it says employer retirement and group health insurance that is paid. So for an employee who's a W-2 is also going to get their total, let's just say it's 100,000 of the 8 weeks, plus the employer's contribution to 401k and group health insurance. Monica, are you in agreement with that?
Yes.
Mark?
Yes, we all agree.
Okay, but we all agree that even though we three agree to that, there are things out there that say that is incorrect.
Right.
And
I mean, with almost anything.
Right.
Yeah.
So with anything. So
yeah,
that,
where you're looking. Yeah.
I mean, it says the word and to me it includes the 401k and the health insurance. But again, and I also look at it as when you applied as an employee owner, you applied saying, here's my payroll, and then here is what is also added towards my group health insurance as well as my 401k contribution. Why are you taking that away now? So, okay, so let's kind of move on. Yeah, this, yeah, I really want to get to this one because I know that somebody asked us over here about like what documents are needed, like for the loan forgiveness. And, you know, what kind of documents should I set aside for forgiveness besides everything and your DNA and your blood type? What do you think, Mark?
Okay, so the money you spend for the PPP spend, right? That money, first off, you should put it in a segregated account, separate bank account, and then treat it like an accountable plan. So anytime money comes out of that account, you write a check out of that account, you better have a receipt or some other document that explains and justifies why you spent it. Of course, if you're running payroll out of it, you're going to have your net paychecks coming out of there. And then when you get done running payroll, right, you're going to have all the net checks will be drawn on that account. Now, what about the employer, or what about the withholdings, right? So you get your employer tax deposit that covers the employee withholding for federal income tax federal income tax withheld plus your Social Security Medicare. That money, you just write a bill to that account and have it reimbursed into your general operating fund. But you're not going to take a deduction and you're not going to spend the money on the employer match for FICA. So the simple answer is any money that you spend out of there, you want to have a document explaining what you spent and why you spent it. So pay stubs are great. Your electric bill's good, your phone bill's good, your utility bill's good, all that stuff, because it's all going to have a date on it. Now, don't spend anything out of that account that you don't have a piece of paper to prove up why you spent the money. That's the simple answer. What docs are you going to need as well? You're going to need detailed payroll records along with timesheets.
Yeah, my favorite report at QuickBooks is called Payroll Summary. And that report is great because it'll show you the actual pay period, you know, the days that your employee worked and what you're paying them for, the days that you're paying them for. And so that's really great. And then in the payroll summary, it puts your gross wages at the top, and then it has your employer paid expenses at the bottom. And that's, I think, one of the best reports if anyone has QuickBooks. If you guys need help finding it, just reach out to one of us. And then one thing I will say, I do have at least one client where they could not get their loan from their bank, and the bank actually is like an SBA special bank. It's actually called Oak Bank. And so they actually couldn't make a new checking account. And then their local bank, you know, is just overwhelmed. So what I end up having them do is in QuickBooks, and maybe other accounting softwares have this, but you can make a separate class and have all your expenses coded to a class or a department. And then that way it's all very clear and separated. You know, in the case that you, go ahead.
But Monica, I would say that is absolute like last case scenario. I mean, that is where you can say, I absolutely could not get my own checking account. I mean, I don't think that is one thing that's really clear. Everybody's just like, hey, get your own account.
Yes, because once you start, you know, having more than one place to look, I mean, the banks are, you're going to probably get someone who's looking at your, you know, 2 bank statements and is like, or, you know, or one, and you have a bunch of activity in there, and they'll be questioning every single item on there. So you want to make it super clear that whatever you're providing them, you have an answer for every transaction, and, you know, what was covered by PPP and what was not. So, you know, if you can make your own life easier, I would definitely open a checking account. But the thing is that I know that there are some people who, you know, maybe didn't get our help initially, or whatever reason they didn't open up a checking account. You know, you're gonna have to explain everything. And so the more you can basically protect yourself and not have things leak into other accounts, the better.
Right. And then I just want to follow up on, Michael made some comments over here about my comment, you know, about the big banks. And this makes me sad because he says, you cannot talk to anyone at Bank of America or Chase. You know, when I said call, be the nag, right? And he said, Bank of America and Chase do not seem to care for their customers like smaller local banks, and don't have a solution for anyone stuck with a large bank. And you know what? That makes me sad. I mean, if anybody's been listening to me, Wells Fargo was just awful. I'm moving to a local bank, you know, and it doesn't help anybody by me saying like, oh, well, you know, go to a local bank now. I mean, you're screwed. Yeah. If you can't get a hold of them and they're not answering, then they're not answering. And I know that Mark, and we won't get into it, but Mark was trying to get his loan through Chase, and they basically, just ignored him as well.
Yeah,
So
and that's the unfortunate thing.
That is really unfortunate. Okay, next question. Is there a chance for companies who received less than 2 million to not be audited? We'd still spend document as regulated. Yeah, Mark, go ahead.
Yeah, so that question, I've gotten that one a lot. They're misunderstanding what the guidance is. So when they're saying they're not going to be audited, they're not going to be auditing for eligibility. In other words, if you got a PPP loan for $2 million or less, you don't have to prove up that, hey, I had an economic need. They've just blanket said, hey, look, if your loan proceeds are less than 2 million, we're going to deem you to have demonstrated the economic need. So that's not going to be examined. That's not going to be up for scrutiny. It does not mean that if you got less than 2 million, you don't have to prove anything up and you don't have to come in with receipts. That is absolutely not what it means. I've got people that think that. They think, oh yeah, I got less than 2 million, so I'm cool. I don't have to pay anything back. Free money, woohoo. Nope, absolutely not the case. So don't make that mistake. The 2 million not being audited, the only thing that refers to is you don't have to prove up an economic necessity for having gotten the PPP loan. Whereas if you got a $3 million PPP loan, you're going to have to prove up that your business really was in dire straits and you had an economic need for that money.
Right,
Okay.
and then what we brought up earlier too was that the banks are going to review all these applications for forgiveness, and it's not going to be easy to prove things to them either. Like we talked about earlier, the yes stamp's going to be locked in the back.
Okay, and I would like to do a shout out to Mark because he's a boss. I mean, sitting over here, I can see now I'm going over to the questions and answers. And as we're doing this, he's actually answering people. I mean, he's like having the conversation with us here. So if you've asked questions, he's answered them. I'm going to go to the ones that have not been answered yet. So caps on owners across all businesses. If one of our owners is an owner in other businesses that got PPP funds, is the cap of 15,385 limited to our business or across all of his businesses? Mark.
I don't know. That's a good question. I haven't seen it yet. The employees are Social Security number specific, and I suspect that if there's related entities, which they were supposed to disclose on the PPP loan application, what I'm getting at is that go ahead, go for it, but plan for the worst. So I would expect that if somebody's already getting paid under the PPP program, 15,385, don't expect that they can pull it at entities 2 and 3 as well. That's what I would expect right now. You can try. Don't be surprised if there's not a clawback later on.
Okay. Monica, what do you think?
I agree with that completely. Yeah, I would definitely not take more than 15,385.
See, here we go. I disagree with that. If you were, and no, but by the way, I'm not disagreeing with you, Monica and Mark. I'm saying, especially Mark and just being super conservative on what's going on. But if you legitimately were an employee in multiple businesses, I'm sorry, you should be able to be paid in multiple businesses. Mm-hmm. I'm not talking about people that, just didn't really work. But if you are a W-2 in 2 different businesses, you should be able, and you're an owner, I don't care. Why should you be treated any differently? You should be able to get your money. So, I mean, that's, again, knowing that possibly, and I do tell my clients this on the sense of, hey, you know what? You're going to pay the money anyway. So if you don't cut the check to that other business owner, then that's certainly not going to get forgiven. Why don't you roll the dice? And then if you have to pay it back, you pay it back. But I don't, to me, it's like, I don't think that's fair. But, nobody asked my opinion. The SBA did not call me and ask me, because if they did, they would get some choice words. Okay, so next question. Please clarify one more time what payroll taxes can be included as forgivable. Payroll, Monica, what do you think about that one?
Well, okay, because I have to try to be clear here. So you can pay gross pay for your employees, obviously capped at certain thresholds, but within those, that gross pay, there's employee portion of taxes. You can pay for that using PPP. What you cannot pay is FICA, the employer portion of FICA. So, and then the nice thing is they are letting you cover Alaska, you know, for in Alaska, you have Alaska unemployment. You can pay Alaskan employment taxes. You know, if you're in a different state, you can pay state taxes, employer portion, you know, employee and employer, because that's a part of gross pay. So just be really careful that you're not paying the employer portion of FICA.
So to simplify it, gross payroll, gross, not the employer match, but the gross employee payroll, 100% deductible. So forget about what taxes. The only tax that the employer is paying that's deductible under PPP is going to be the state unemployment. That's it. Everything else, now just because the employee doesn't get 100% of gross, they get a net. Yes, but you get the gross paycheck that the employee gets, including the amounts that are sent off to state and federal.
Right.
Okay, so say that we're like, hold on, Monica, I got a question for you guys. So say, you know, we're in second quarter right now, and my staff's unemployment, or, you know, payments to Department of Hawaii, Department of Texas, and Department of Alaska, and Department of Labor, that's not due. Should we just then write a check for the amount that would be owed and say, hey, it was paid and incurred during this time?
I would.
Okay. What do you think?
Yeah, absolutely.
Okay, so
I wonder logistically how that would work, but I mean, but maybe, you know, when it said that in the guidance where it said that you didn't necessarily have to pay it as long as it's in the normal course, you know, of the payroll cycle. So I'm curious for these taxes, if you could wait to pay it and just document, you know, using the payroll summary if you have QuickBooks, or another document showing, okay, these are all the taxes that I can use and have covered, and this is what I will pay. But I mean, it would be safe to pay it first up front, but, you know, I know some places they might prefer it that you pay it, you know, as one payment. So.
Oh yeah. I'm just wondering where that check may go into la la land. Okay, yeah. Mark, this one's for you, Mark. If you had to open an account at a separate bank, can you wire from where the PPP loan is held to your main account that you pay payroll from? Or does the payroll need to be run out of the account with the PPP loan monies?
No, the payroll does not need to be run out of that account where the money sits. We simply recommend that for an ease of accounting. It just makes life easier. You have a bank statement that ties to all the disbursements out of the account. If you want to wire the money every time you run payroll out of your general operating fund and then reimburse your general operating fund, hey, that's fine. I think you're increasing your bookkeeping work, and you know, if you're not a skilled bookkeeper or accountant, you might screw it up, but yeah, you don't need to keep it all in the same account.
Okay, and I had no idea it was going to last this long, but this is going to be our last question, and it says, is there no specific guidance on how sole proprietors apply for forgiveness? No payroll issued, just transfer from business to personal account. I would say you take your 2019, whatever your net is there, and I think, Monica, what is it, like line 17?
On the 1040, I thought it was like in the 30s.
Yeah, the Schedule C, it's line 31 on the Schedule C, and then net of your adjustment on the front of the 1040.
Christy, you're thinking about the K1 line 14A.
Okay. So you take that number of what it was on 19, you divide it by 52 for 52 weeks, and then times it by 8. There you go. I mean, there's no payroll. I just transfer the money from one account to another and go, here's my, you know, and for your forgiveness, here's my 2019, and here's what I took. Is it that simple, you guys?
Close. You also have to adjust it by the amount of deduction that you have for self-employment tax.
You have to do that?
Yeah, because that's an adjustment you're not paying tax on.
Okay.
At least that's my recollection of it. Again, get with your accountant. If you don't have an accountant who really understands this, has a deep granular understanding of this, find one who does. And Christy, before we go, how does everybody get in touch with us?
Okay, so at the end, well, this is going to be posted on my Business Tax Ninja, and we'll post this back onto LinkedIn, and it'll have everybody's contact information. Altman, Rogers and Company for Monica Reid, that is in Anchorage. Tax Solutions for Marc Enzi, that's in Houston. I mean, if you just Google that, right? And then law offices of Christy Lee. Actually, if you just Google tax attorney Hawaii, you'll find I like the only one, or tax attorney Alaska, I'm the only one. And then when we post this, Mark, we're going to have everybody's contact information on there.
Okay, I'm going to put my my company name, phone number, and website here in the chat, in the webinar
Okay,
chat.
and I do see more questions. I'm sorry at this time though. I mean, it's been an hour. Everybody's been wonderful. And I'm glad pretty much everybody stayed on the entire time. So that means it was relevant and people were interested in it. I don't know if we'll have another one. I enjoyed it. Monica, would you be willing to have another one of these when we get closer to the forgiveness?
Yes.
Mark, would you be willing to have another one of these?
Yes, absolutely. Be more than happy to. And hey, folks, don't feel like you're lost and you're on your own out there. If you've got questions, you know, and you want to have someone help you with this, give us a call. Now, I'm not going to sit here and do your homework for you and say good luck. But if you've got general questions, you know, feel free, get a hold of us or get on the next webinar. But you really do need to either become an accountant or a tax attorney and figure this out for yourself, or you're probably going to have to hire somebody, or just get used to the idea that, you know what, I might have to repay all this. So the forgiveness is definitely not guaranteed, but you're going to have to do some legwork, and it's going to take some time and effort to get this thing to be forgivable. And you know what? Look at it like this. What else is going to pay you as much as this would if you get forgiveness? So put the time and effort in at the front end.
That is very, that's very
hire
good
a pro.
advice.
Yeah.
That's true. Monica, last words?
Nope, just give us a call if you guys have questions. You know, I think all three of us have really spent a lot of time, so definitely, you know, you can trust all three of us to ask questions.
Yep. All right, you guys, I am now going to terminate this. I want to say thank you to our panel, including myself, for being here, and a lot of you and all your questions. It really warms my heart because a lot of these people have been to a lot of our webinars, and you want to do what's right. And that's what we are hoping, that everybody gets their loan forgiven. So until next time, goodbye, everybody, and go make some money. Bye, y'all.